to your athletes out there and you professional athletes, there's the disturbing statistic that I've been made aware of that over your career, and this is, maybe in the professional arena where 60% of the professional athletes end up basically in the poorhouse after their career. And the question is, why is that happening? If you look under the covers, I think part of it is that a lot of people that are in this area or in this profession, first of all, were never taught how to handle money. And number two, felt that now that they have all this money, you can just spend it as fast as you want because it's going to be there tomorrow. And number three is somebody came along and said, I really know I can really invest your money and make you a lot of money. So let's look at that a little bit. I think that one of the problems is to get ahead in life, you need to save money for the future because you don't know what the future brings. So getting a big fat salary for a couple of years is great, but spending it as fast as you get it is not so great. So the suggestion is you should really look at, I'll call it your professional plan of how long you're going to be in a professional sports, what type of income that's going to generate over that period of time, and what you should be putting away into a safe investment every year that you're in that arena. And one of the ways to do that is to look at the opportunity, for example, at Wall Street Winning, where we basically allow, or you allow us to make decisions and investment in your account with stocks and options in the stock market. We're trying to show you that you can do very well without taking significant risk and not relying on the hope of someone saying, I'm going to double your money or I have a great investment for you, but where you actually own real companies, you have assets that are based on things that are out there that you almost can touch and feel. Even that football you throw, made by Wilson, the Wilson company would be a company that you could be invested in, for example. And owning that company over time would allow you to grow your asset base so that down the road, when your career is completed, if it's on your plan, you should be well positioned for the rest of your life. And in some cases where your career is ended, prematurely, you might have had an injury, something might have happened where you no longer can play, that is a possibility. And you have to plan for that possibility. And the best way to plan for that is to put away some assets real early in your career and over time grow that asset. And there's an opportunity, I think, with Wall Street Winning to help you manage those assets so that down the road you have something there that you can basically use. And our examples are, for example, on $1 million account, you should be able to generate $300,000 of income per year. So you could maintain a fairly good lifestyle, but if you do that with the plan up front, rather than buying a $4 million house or that Ferrari, you might do with a little less and put a little bit more away for the future. I think it's to your best interest that we're looking out for that for you. So just a suggestion and possible opportunity for you.
And with that $300,000, that's after taxes, right? So that's after taxes, after fees, everything. That's $300,000 spendable cash.
Spendable cash out of that account, correct?
Right.
So,
and addition to that, let's speak to you, Ron, because you were a professional. You were a professional in NASA. You were a professional. You worked for the government. You worked for a public company. So you were a professional businessman, just like a professional athlete is a professional businessman in the business of sports. And you retired in your 40s. So you've been living off of what? Can you explain how you? Because it's not like it's an anomaly, like you can't be done, or this is something strange. This is something you've done in your own life, right?
That's right. That's correct. So I took an early retirement package in said I can, based on my knowledge and what I experienced by using options in the stock market, I said I could replace my corporate salary by taking the payout in a retirement plan and put it to work in the stock market. So I'm not relying on a retirement, let's say, plan where it's an annuity. It pays you X amount a year. It's one that basically I've engineered myself, where I've taken the asset and gone into the stock market and generate a income from selling options on assets that I own. And the key is there are going to be market up times and market down times. And the key is to be successful during the whole period. So one of the things that people get all nervous about is if the stock market goes down, what happens? Well, the stock market goes down. If I own some equities, I can still generate an income off of those equities. Some of them might generate their own income called dividends. That can be maybe 2% a year, but you need a pretty big asset base to live off of 2% a year. I'd rather be in a position to generate 40, 50% a year. And that's very doable with options by owning good companies that are available in the stock market. So the key is that this is not just a theory or a whim. I've been doing it in actual practice for a long time, and all the principles and strategies that we are using at Wall Street Winning are based on my experience. And it's, it can be done and is being done. So the key is being able to, let's say, have patience by investing in items or equities in the stock market, to have a plan so that when, for example, the stock market goes down, what do you do? Or if it goes up, what do you do? Or if it stays flat, what do you do? And so those are part of the things that we're publishing at Wall Street Winning, is what equity to get into, when to get into it, and what options to sell, no matter what the market is doing. And that way you have a roadmap. I didn't have a roadmap. I had to create my own. You have the advantage that we now are really publishing a roadmap for you to be very successful, and we will even execute that roadmap for you in a ProX account. And all you have to do is watch, take out the income and do with it whatever you need. Maybe you need to use it to live off of it on a monthly basis, or it's for your grandkids, or it's for a fantastic trip. That's your decision. So the key is, though, is you have to have a plan and execute it. And if you follow the plan that we're publishing at Wall Street Winning, you can do very well. Have a very happy, successful life.
Let's talk about that life. So you have income for life, and that $1 million that you put into your own controlled account, it always stays there, right? So it's always $1 million, and everything else is income. And that's income for the rest of your life, right? That's
right. And right, that asset is there. You put together your right, I'll call it a trust, so that it transfers correctly down the road. You avoid all the taxes you can, and so forth. So that's one of the things that's also very important. We're not like an annuity where you're basically, the principal is disappearing. They calculate it so that your money is gone in X amount of years. Well, we don't calculate that here. We want that money to be there 20 years from now, the same amount or more, and you have been able to generate an income off of that over that period of time. So that's kind of the path or roadmap that we're publishing. For example, if you put $1 million into the ProX account, Wall Street Winning would execute the trades that we publish in that account, throw off the income, and that $1 million will stay there for the rest of your life. So the key is being able to maintain the asset, and that's the plan that we're doing with the Pro and the ProX, managing the $1 million, that asset level, so that it remains at $1 million
for your whole life.
For your whole life, right?
Nice. So if you live 20 years, your money's still going to be there.
Should be there.
You live 30 years, your money's still going to be there.
As long as you don't take it out.
Exactly. But since you have the income, you don't need to take it out.
That's right.
You're taking out from the income. You're not taking out from the capital or the principal.
That's it, and that's where people need to, on that income, save a little bit, build it up if they want to buy something new, and not go and tap onto the asset. Okay, so they need to have a saving mind, savings in their brain, so to say. Say, yeah, okay, I'm getting this income. It's like, yeah, I should save some of it because we want to do something special with some of it. That's fine. Save it ahead of time before you go and spend it. Don't take it out of the asset base.